So what do you mean by unit bank? Unit banking is a system of banking wherein a bank operates in a limited area. Local development. So you are accepting money from the customer as well as you are using this money only for that local development. Branch banking refers to the system in which bank provides banking services through a wide network of branch offices. Hello everyone, a warm welcome to one and all to the third session on Law and Practice of Banking. I am Meghana from the Department of Commerce, lecturing in Vidhyaashram First Grade College, the Temple of Excellence. In the last session, we finished with the types of banking, commercial bank and various other types of bank. In today's session, let us discuss with the banking system. So under banking system, we are going to study the various types. So that under that first one is a unit bank. So what do you mean by unit bank? Unit banking is a system of banking wherein a bank operates in a limited area. So here unit banking is a banking system where banking activity is restricted to a limited area. It is restricted to limited area. It does not open any branches. So unit bank, only single unit operates in a particular area. So no branches for such banking system. So only one main branch. So they are going to run as a single branch or single unit. So no other branches for such banks. So that is unit banking. So it is limited or restricted to a particular area. Then it does not open any branches in other places and more responsive to local needs. So here the responsibility or the more concentration is for the local needs. Then this independent and isolated units have to take care of the entire banking operations and maintain a good health. Thus have to raise their capital and deposits locally. They are more efficient as they have a limited scale and lack of any gap between the decision making and executives. So mainly unit banking is a banking system which is established in a local area or in a particular area. There is no branches for such accounting system or banking system. So they accept the deposit from the local area as well as they lend their money for that local area only. So here banking activity is restricted for a local area or limited area. No other branches are opened under this banking unit banking system. So their concentration is to develop or to encourage the local customer in that particular area. So next, what are the advantages of this unit banking? So first one is local fund for local people. So they accept the deposit from the local customer. So they use this money in order to lend only particular area. So only for that particular area they are going to lend. So the customer for this unit banking is local area or local customers. They accept from local customer and they are going to lend only with the restricted area. So next one, intimate knowledge of customer. So here they have a complete knowledge about the complete information about their customers, because banking activity is restricted to a small area so that the number of customer is also less. So you can collect complete and detailed information about the customers. So know your customer, KYC. So it's easy for the banker. So they can recognize and they can completely collect the detailed information about their customers. So next one, efficient management, supervision and control. So when the number of customers are limited, when the operations are restricted, so it helps for the effective management. So you can control a limited number of staff as well as the customer. So it leads for the effective management and decision making. Next one, discontinuance of inefficient branches. So their intention is to promote local area or local customer. So inefficient branches you can discontinue if the branches are not working effectively, or inefficient branches you can remove or you can wind up those branches. So it will not affect for the other branches or the whole bank. So it is mainly established in one particular area so that if it is not working or if it is not working effectively, you can remove that bank or you can discontinue, wind up that banking activity in that particular area only. So next one, better service. Better service. When the customers are limited or restricted, you can give better service for the customer. So it increase the efficiency for the services. So next one, close customer banker relationship. So the number of customer is less. So you can maintain a good relationship with your customer. So the customer and banker relationship is also good. So you can communicate and you can maintain a good relationship with your customer. So these all are the advantage. Next one, no effect due to strike or closure. So because it is restricted only for the local area, the strike and closure will not affect for such banking or such unit banks. So it works according to their needs and requirements. So based on the customer needs and requirements, you can operate your business or you can operate your banking system. So it will not affect, any strikes and closure will not affect for this unit banking system. So next one, no risk of fraud. No risk of fraud means you know your customers. So number of customers are limited. So you know their ability, your repayment capacity of the customer, their background. So based on that, you are going to lend money for them. So the chances of risk, the risk chances is less. So fraud, no risk of fraud. So the fraud activity or the chances of losses is also less under the unit banking. Next one, closure of insufficient banks. As I told you earlier, so insufficient bank can be closed down. So based on their activity, based on their requirements and needs, you can activate, you can run the banking activity, you can run the bank or you can close the inefficient banks. So next one, local development. So you are accepting money from the customer as well as you are using this money only for that local development. That means in order to promote the employment opportunity as well as in order to promote the local customers, you're going to use that money. So it leads for the local development, local fund for the local people. So it helps to promote that local area. So that this unit banking helps to develop a particular area. So next one, promotes regional balance. It helps to maintain a regional balance. So these all are the advantages of unit banking. Mainly unit banking is a single banking activity or single bank which operates in a particular or restricted area. There is no other branches for that particular banks. So based on their needs and requirements, it is established in a local area. So in order to promote the local activity, in order to promote the local customer, this unit banking came into existence. So moving further, next one is a branch banking. Branch banking is opposite for the unit banking. So unit banking is a single banking system, but branch banking has a different branch. So the name only says it has a different branch all over the world. So branch banking refers to the system in which bank provides banking services through a wide network of branch offices. So they provide the banking services through the wide network of branch offices, bank branch offices. So next, if a bank has 10 branches in a city, account holder can choose nearby branch to make deposits, withdraw and avail other services based on customer requirements. So based on customer convenience, you can choose the branch. So all the branches will provide the same banking services. All the activity or all the services provided by the main branch is also provided by the branch offices. So that based on the customer convenience, you can select the branch. So account holder can select the branch for their services and based on their convenience. So next one, the branch office will offer all the services that are offered by main branch. So branch offices, they offer all the services which they offer from the main branch. Next, the main branch controls the operations of the branch office. Each branch has a manager who is responsible for managing all the activity of that branch. So for the each branch, we have a branch manager. So all the branches are controlled by the main branch. So here the responsibility for each and every branch is a branch manager. So branch manager is responsible for that particular branch and the manager or the head office main branch is going to control all the other branches. So next, what are the advantages of this branch banking system? So first one, economics of large scale. So you can spread your business, you can provide banking services for the large scale industry or large area, wide area. Next one, spreading of risk. Here you are going to spread the risk. Under unit banking, the risk is less, but it is restricted to limited area. So here risk is spreading. So that means If any chances of loss in one branch, it can be covered from other branches. So, through the different branches, you can spread out the risk. Next one, the economy in cash reserve. So, through this branch banking, you can maintain a cash reserve ratio with the RBI. So, it helps the bank to utilize whenever it is required. Next one, diversification of deposits and assets. So, now from all the branches, we collect 1 crore rupees per month. So, we can utilize this money for the different location based on the requirement. So, from the branch 1, we collect 50 lakh rupees. The lending requirement is less. So, the branch 1 is not utilized full 50 lakh rupees for the lending purpose. So, you can utilize that 50 lakh rupees to lend in other branches. So, you can utilize the fund, deposits and assets to different branches. So, you can diversify the deposits and assets. So, next one, decentralization of risk. So, here the risk is decentralized. So, now the risk is not only for the main branch or only for the particular branch. So, it is diversified. The chances of risk is less under the branch banking. Next one, easy and economical transfer of funds. So, through the various branches, we are providing all the banking services. So, wherever you require the money, you can utilize this branch banking services and get the banking facility. So, this is easy and economical transfer of funds. So, next one, cheap remittance of facility. So, they provide all the facilities at a lower rate. Next one, uniform interest rate. So, it helps to, branch banking helps to maintain a uniform interest rate all over the world. So, for all the branches, the interest rate is fixed by the main branch, so that it helps to maintain a uniformity in interest rate. Next, proper use of capital. So, under unit banking, you need to use the capital or the deposits only for that restricted area. So, here you can better utilize the available resources or the capital. You can better maximize your utilization of the available resources. So, next one, better facilities to the customer. So, through this branch banking, you can give better facilities, better services for your customers. So, next one, contact with the whole country. Through this different branches, you can have a contact with the whole country. Next one, uniform interest rate. Uniform interest rate. Through this branch banking, all the branches have a same interest rate. So, it leads for uniformity or uniform interest rate. So, next one, better training facilities for the employee. Better training facilities for the employee. So, now job rotation can be happen under this branch banking, so that you can transfer your employee to other branch to get some knowledge in all the areas or all the branches. So, it helps to increase their skills and knowledge. So, it helps to increase the knowledge of your employees. So, these all are the advantages of branch banking. So, unit banking and branch banking. Moving further, next topic is group banking. Group banking is a term that refers to a type of banking plan offered to group such as employees in a corporation of people instead of individuals. So, here group banking is a banking facility or banking activity, banking plans it offers to a group of employees in a corporate field. Rather than an individual, we give this banking facilities for the group of employees, group of members. So, that is for the corporate field. This plan provides incentives and other benefits for those who participate, which are not readily available to the bankers' other customers. So, group banking also refers to the control that a company has over two or more financial institutions. So, here group banking, it's the banking facility which provides for the group of people or for the corporate employees. For example, insurance policy. So, insurance policy for the company, the feature or the benefit of this insurance policy is different from an individual. So, as an individual, if I purchase an insurance policy, the features and the benefits are different, as well as it is restricted. It is less compared to the group policy. So, if an insurance policy is provided by the employer, So its insurance policy provided by the employer, the benefits is high. In a similar way, any financial benefits or any banking facilities provided by the employer or for the group of employees, so the benefits and the offer is high under the group banking. So as an individual, we won't get that facility or benefit as an individual. So group banking is a banking or financial services for the group of employees in a corporate field. So this is group banking. Next one, chain banking. So chain banking refers to the system where one or few individuals control two or more banking companies. So here, two or more individuals, they have a control over this financial institution or banking company. So they regulate or they control this banking activity. So which are independently chartered or by the same group of person through purchase of shares of such banks. So individuals secure enough stock to get the controlling interest in the banking corporation involved. So here, if two or more individual, they purchase enough shares of this such banks, so now they have a controlling power over the banking system or that particular bank. So two or more individual have enough power to control banking system. So that is chain banking. Two or more individual have a control over banking or banking activity is called chain banking. So next one, mixed banking. Mixed banking is the combination of deposit banking and investment banking. Mixed banking system is a combination of both. So they accept deposits as well as they invest. So they act as a depositor as well as the investor. They accept the deposit from general public and they invest it on the other business. So in order to make profit. So they utilize this profit in order to give interest for their customer as well as in order to manage their day-to-day activity, in order to meet their working capital as well as their expenses. So next, when the commercial banks undertake industrial banking, it will have a large amount of funds to provide substantial aid to the industries as a long-term loan. So hence mixed banking helps for the industrialization. So now they accept the deposit from the public. Now they have a large fund in order to invest. So they can invest or they can utilize this money for the industrial purpose. So it helps for the industrialization. So now they can give a long-term loan for the industrial purpose. So it helps to develop industry in the economy. So this is all about mixed banking. So next one, narrow banking. So what do you mean by narrow banking? A narrow bank can be defined as the system of banking under which a bank places its fund in risk-free assets. So they place their fund under the risk-free assets. So maturity period matching its liability maturity profiles. So that means if a fixed deposit, so now the bank have a 1 crore rupees of a fixed deposit, the maturity period is 10 years. So they utilize this 1 crore rupees, they invest it on some other business. So that maturity period is also restricted to 10 years. So the maturity period of the deposit as well as the lending should be matched. So they don't want to take the risk. So they invest on the risk-free assets. So this type of banking, narrow banking, they are going to invest the deposits on the risk-free assets. So here the profit also less. So under this narrow banking, the profit is limited or less compared to other banking because they are not ready to take the risk. So next one, so that there is no problem relating to asset liability mismatch and the quality of asset remains intact without the leading to emergency of substandard asset. So the risk is less as well as the profit also less. So this is all about narrow banking. The next one, universal banking. Universal banking is a system in which banks provide a wide variety of comprehensive financial services, including those tailored to retail, commercial and investment services. So they provide various banking services for the retail, commercial and investment services. So commercial banks typically offer consumer and business services such as checking and saving accounts, business and personal loan, including mortgage and auto loans and certificates of the deposits, CD, certificate of deposits. So they provide all this facility banking services for their customers. So this is all about the universal banking. So last one, offshore banking. An offshore bank is a bank regulated under international banking license. It is regulated under the international banking license. So which is usually prohibits the bank from establishing any business activities in the jurisdiction of establishment. Due to less regulation and transparency, account with the offshore banks were often used to hide the undeclared income. So here under this offshore banking, so they regulate under the international banking license. So the transparency is less under this offshore banking, so that they use this bank to hide their income, hide their undeclared income. So this is all about offshore banking. So under the banking system, we study about the unit banking, branch banking, universal banking, narrow banking, chain banking and offshore banking. So this is all about the banking system. So for this topic, we wind up with the unit 1. So in the next class, let us start with the unit 2. Until then, keep watching. Thank you.